Today, we're going to talk about why entrepreneurs need a fractional family office. So I'm really excited. This gets into the problem statement that our firm aims to solve or does solve, and brings up a lot of the issues that we see all the time in entrepreneurs.
Yep, it's a big problem.
Let's start with the flat tire, the financial flat tire. This is an image that shows, I'll let you describe it in more depth, the financial flat tire. It's on our website, and this is something that hooks in every entrepreneur who feels these pains so acutely. So walk us through, what is the financial flat tire, and how did you come up with the motivation even to visually design this?
This is page 47 if you're following along with your book. And this is really the problem that all entrepreneurs face, and really the reason for our company to exist. And that is, over an entrepreneur's lifetime, they pick up a bunch of different professionals, a bunch of different advisors. So if you picture a wheel, or if you're looking in your book at the financial flat tire, if you look at a wheel and you think of those advisors like spokes on the wheel, that could be your accountant, your insurance agent, your banker, your corporate attorney, your estate attorney. If you picture those professionals all on that wheel, they're usually not all A players. They're not talking to each other. They're not collaborating. No one's holding them accountable. But the worst part is the entrepreneur sits in the middle of that wheel managing that team, whether they know it or not, when they don't have the time or the expertise in the areas like tax, legal, insurance, and investment. And that causes a lot of problems. But that's where Mimi and I found ourselves in the middle of that wheel. And that's where we said, there's got to be something better.
Yeah, and I think one of the things that illustrates is there's a lot of problems that come with having the financial flat tire. And so one of the main problems that we see for our entrepreneurs who have that financial flat tire is they're getting crushed by taxes. And so this is one of the pain points that sometimes they'll acutely feel is like, why am I writing 6 to 7 figure checks every year to the IRS? Maybe they have a CPA. Everyone does have a CPA. But then the issue is a lot of those CPAs are what we call tax historians, not tax planners. So they're always looking in the rearview mirror, collecting documentation, reviewing the 1099s, the K1s, building your business and your personal tax return, and saying, all right, hey, Jim, you owe, $280,000 on April 15th. And don't forget your Q1 estimated payment of $400,000. And I'll see you again next year. Here's my bill for $5,000. And so one of the biggest issues that we see is the taxes being a silent killer. What's another issue that you see as a product of having a financial flat tire?
Well, one other thing, it's not in the book, but just to be aware of, is taxes are such a pain point for entrepreneurs. They look for solutions. Many times the traditional CPAs, as you said, are historians. And now there's this new category out there called a tax strategist. And I would just tell the listeners to be very cautious for the tax strategist. And often they get charged a flat fee, but then that hides other ways they get paid. A percentage of taxes that they save you, referral fees for introductions that they make. That type of structure encourages that person to put you in the most aggressive strategies possible. And that can make sense, but guess what? You are responsible as the taxpayer for any penalties, interest, or if the IRS says that it's actually criminal and you've committed fraud, they're going to hold you accountable no matter what you said your tax strategist had told you. If you have someone like that who's pushing you to do things that are aggressive, not letting you get second opinions, be very careful about what they call a tax strategist. I know that's an aside, but it's just important because I see it going on a lot right now. Other stuff that they have to worry about is just the lack of coordination. So often the professionals are in silos. The attorney does the legal work. The accountant does the tax work. The insurance agent does the insurance work. The investment person does the investment piece. And what happens is all of these things intertwine. They're not just solo type things that need to get done for the entrepreneur. And when they're not coordinated, there end up problems, mistakes, omissions, and missed opportunities.
Yeah, and building on top of that, asset protection, lack thereof, another common side effect here, because again, no one is collaborating. And so maybe you as an entrepreneur start a new business, maybe you reach out to your commercial insurance agent and you get a new policy in place, but is that entity set up the right way? Is it titled in the right trust? Are you protecting the corporate veil? There's all of these different things that if you as the entrepreneur are in the middle of that wheel, right, that broken financial flat tire, you are responsible as the entrepreneur to coordinate all these different professionals. And that oftentimes leads you exposed to creditors and predators when it comes to asset protection. So I think that's another big gap that we see quite often, is that constantly entrepreneurs have no asset protection plan. And there's nothing scarier than building a very successful business and building wealth and the thought that with one lawsuit, it can all disappear.
Yeah, I can think of a couple of instances. I think one, I remember we had a client that sold her home in Florida, and bought a home in California. Well, Florida has unlimited homestead protection. California has very limited asset protection. And then obviously had to get new homeowners insurance. And the new agent out in California didn't know, and so did like minimum coverage on liability. So she went from a $10 million umbrella on a home that was completely protected to a home that was almost completely unprotected with almost no liability coverage on the home. And that was because everyone wasn't talking. No one was talking to the people that actually knew the balance sheet and how much money there was. No one was thinking about asset protection. You had the realtors, you had insurance agents, but no one was coordinating the whole thing to make sure that the protection was there.
Yeah, another thing I'd say is oftentimes having a financial flat tire, you end up investing like Main Street and not like billionaires. And when we look and study at how billionaires deploy their capital, they're invested around 50, 60% in what we'd call publicly traded assets. Think of stocks, think of bonds, cash, but 40 to 50% is going to be in private market. And this is going to be real estate, hedge funds, commodities, currencies, private equity, venture capital, all of those other asset classes. Yet if you go down the street and you talk to a Main Street advisor, they're going to put you in a 60% stock, 40% bond portfolio, slap a 1% fee, and put you on your way. How come the smartest and the richest people in the world, their allocations look completely different than that? And it's just because, again, this is a huge opportunity, a huge gap for business owners. They're investing like Main Street.
Yeah, and I'll give a little plug for our friend Bob Frazier, who has a book, Invest Like a Billionaire, that talks about private markets and how often those are being overlooked by the average entrepreneur investor. And today there's more access than ever before. 20, 30 years ago when I started in the business, there was very little access to private investments. Now there's a lot. Now you still have to be careful in that area because there's a lot of private investments that are risky or are expensive or have not been vetted. However, it's important to start looking beyond the public markets to actually get a truly diversified portfolio that's going to grow over time.